Hello, this is Jim Worden with the fourth quarter market update. Just wanted to walk through some of the things that happened in the third quarter, some of the things that people are feeling right now. Obviously, there's a lot of concerns with the geopolitical conflict that's currently going on, continues to go on with Ukraine and Russia, and now we have this terrible human tragedy with Israel and Hamas. So that is something that's certainly weighing on a lot of people's minds. Fortunately, this does not have a major economic impact on earnings and on growth. The other thing that's been challenging for investors that does have an impact is higher interest rates, higher gas prices. This has been very difficult. Mortgage rates got to 8% on the 30-year average fixed rate for a mortgage. So this is certainly difficult for a lot of people. Credit card expenses are higher than normal. Volatility has been higher for both stocks and bonds. And so that is all the bad news. There is some good news, I would say, with the current quarter and even looking into the beginning of next year. Number one, first and foremost, inflation is coming down. So we're seeing those numbers come down. Perhaps they're not coming down as much as a lot of people would expect or want, but they are coming down. The Fed's preferred measure of inflation, core PCE, that's expected to hit 3.7% here in the next few days. And we could see that come in lower than that. So that is a very good sign. Earnings continue to surprise to the upside. So the last earnings season, we had a lot of companies reporting better than expected earnings. We're just getting started in the earnings season to review what happened for the third quarter. These companies so far have been reporting good numbers, and we're seeing a lot more upgrades. We're seeing higher revisions upward. So this is something that a lot of people were predicting, that we would have a terrible recession and we would have a bad earnings recession. We're just not seeing an earnings recession. Things are looking pretty good from that angle. Credit conditions continue to remain very, appealing right now. High yield spreads are still very low. This is not an environment where it feels like there's a lot of economic distress. So that is a very good positive thing. Inflation, I mentioned, is coming down. Earnings are not slowing, but in some cases they're getting revised higher. GDP, we're going to get our first look at GDP this week, and it's looking like we may have 4.5% GDP growth for the third quarter. This is the first number that comes out. There are revisions that come out after that, but with that 4.5% estimate for GDP, we're also seeing an estimate of 4% consumption. That's personal consumption. As a lot of people know, consumers make up roughly 2/3 of GDP growth, and so consumers are still spending. They're still in a good place. For some consumers, they still are in a very financial healthy position. For others, they're needing to borrow a little bit more. But in aggregate, consumers look pretty good. And so looking at the fourth quarter, this certainly looks positive. I would say volatility has been higher. That partly is due to seasonality. October, as many are aware, is the most volatile month. So as we're wrapping up October, heading into November and December, if we do see that the Fed pauses in November, and they could very well likely also pause in December, this could actually be a turnaround in terms of the markets. And I would say a turnaround for both bond and stock markets to move higher. So just wanted to, let you know that, this has been a challenging market environment for investors that are tempted to move around and make a lot of changes. This is not the time to do that. We should be staying diversified. We should be keeping with whatever our investment objectives are. And, you know, a lot of people are saying the markets are going to go down a lot from here. There's also a lot of people saying that the markets will go up quite a bit. And so this is really not the time to be emotional. This is the time to, you know, hold on and understand that we do go through seasonal changes. The leaves out here are changing colors and they're falling. And so we do have different times and seasons where economies slow, economies grow, the markets do the same thing. And so just wanted to get this out there for everyone. Wishing you all a wonderful holiday season and best wishes. Take care.